Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, we got to warn you about March because there's seasonalities, there's volatility, and it's going to affect everything from the stock market to crypto, and we'll also cover some Bitcoin technicals as well. So let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Hey, it is holiday season and our holiday specials are running right now. Use promo code HOLIDAY. You already blew it. You missed the Black Friday specials, but this is your second chance to take advantage of some of the best pricing that we do for the year. Check us out, tradelikeagenius.com, tradegenius.co, tradegeniusacademy.com. All roads lead to Trade Genius. Check us out. Incredible deals. Thanks for listening.
Okay, Bob, as we've talked about before, we have Opex every month, options expiration, and then that following week or two becomes better chance of bears getting their way. And we're seeing that today. And SMCI has been hammered, NVIDIA, big red day, which has been quite rare. How do you see this going forward into March?
Yeah, so I guess the phrase beware the Ides of March is probably pretty apt here. We have a situation where twice a year, and, in years past, before they have all these suppressing, options and algos, usually get a really big spike twice a year in VIX that you could short. We'll talk about that one in a month, hopefully, that we'll have a great short trade on. But going into from the February to the March Opex, there's always a really huge lift in volatility. And if we can pop that chart up, I want to show everybody this, is that the bottom that came in, I guess last week, they call it the Valentine's Day Massacre. You want to buy VIX Valentine's Day, and then you want to sell VIX the middle of March. And it's so weird, Phil, and maybe we just made things so complicated ourselves. Seasonality has been working in the last year. It's almost like the AIs that they programmed said, oh, we found these websites with these seasonal charts on them. Let's just follow them. And, we had a little bit of bump in vol in January, got beat back down, and now we're getting a bigger bump again, and the market's reacting to it, which is going to feed on itself. So that's what we're looking for here into March. Now, the only caveat is that this market has been insanely resilient. And if we don't get a good push down here in the next week to 10 days, actually start a gamma cascade to the other side, which means acceleration to the downside, we're going to get acceleration back to the upside. So right now we're cautiously pessimistic in the market. And if it really starts to roll over, then we should get a pretty good push down into the middle of March, maybe even into Opex. And then that Wednesday before, we should be able to flip. And then I think your scenario plays back out, Phil. We probably get a lift into June. Now, one thing Jam Croissant's been saying is that across the curve, volatility is lifting. So it may not be a great trade like they had last year in terms of a push higher because more people are protecting themselves. But he also said that if everybody's expecting it, we may get that squeeze. So we may get that summer squeeze that you're looking for. And I'm going to throw the Bitcoin chart over to you. I'll just mention the seasonals and then I'll throw it to you, Phil. If we can bring the Bitcoin chart up, which is really interesting. These are halving years only. March has never been a favorite time to be long. And the only thing I'm going to say about Bitcoin is that Bitcoin since October has followed the market really closely. Bitcoin went as the market went. The market gets a sell-off. I don't think Bitcoin can avoid the liquidity issues. And then we got the halving, seasonality coming up. So I'd be cautious here. I went ahead and added to my BITI today, and hopefully I'll look for a trade, take me up to from the $10.50 to $11 area, see if I can scam 5% out of it, and then evaluate. Back to you, buddy.
Yeah, so again, we're dealing with a halving year. This halving year is different. Why? Because we have a lot of ETF flows that have come in, and we weren't sure what was going to happen there. There was a sell the news event with the ETFs, and then that was quickly bought back after a quick dip under 40. And here we are. We just tagged 53,000, or maybe just shy of it pre-market today. But we were concerned about the downside, and we're going to get into the chart of Bitcoin here in a bit. But I think that when it comes to like looking at this cycle, I think you do have to take into account those ETF flows, but you also are going to be beholden to the market flows as well on the whole. So like Bob said, bears have an opportunity here. I think you have to watch for pullbacks this week. However, if they don't really get much done to the downside in the S&P 500 and Bitcoin, then these tailwinds, these gamma tailwinds are going to come back into the market. And it's going to be like what we saw in January, because if we go back to that VIX chart, the volatility and the seasonality, you'll notice January, middle of January on up, should have seen a big spike in volatility, which typically means market down, and we did not get that. We started to get kind of a little bit of a pullback after Opex, but it never really materialized. I think post Opex, the first week was flat, and then it kind of just started to drift back up. So that's the way these things work now. And so, but February going into March is a little stronger in terms of seasonality. So again, we'll have to see how the week goes and if the bears can get it done. And speaking of bears getting it done, Bitcoin, along with some other tech names, have really kind of taken it on the chin. Now, pre-market, this Bitcoin was up quite nicely. It actually poked a new high on some exchanges. I think it might have even printed 53,000. But this is not a bullish candle. Then you don't want to see this candle. This is a 12-hour candle, so it's a half day, just because it's a little quicker than the daily, but still a big time frame. And, we still got 5 hours plus to go in this session. But if this candle closes like that, this is what I call a raid reversal. When you go up, you take the highs and then you immediately engulf the candle before it. And that's what we got here. So this is a very bearish candle as it stands. If you're bullish, you kind of want to see this get eaten all the way back up into the close today. Otherwise, settling down in this area is not really good. Then I marked out these areas of bullish supply. So just trying to keep it clean here for you guys. And the way I like to do it is I like to mark out these areas, these levels that I believe we should see a reaction, and then let the indicators and do their thing inside these zones. So basically what I'm looking for is a sub 50K move, which would take us down potentially as low as 48,300. And the reason why I'm kind of interested in that zone as well is because this larger shaded pink area is, if we zoom out to the higher time frame here and zoom out, this is your 50% of the entire move down. Okay, and to the 618. So the 50 to the 618, right? Your golden fib pocket, basically. And what I'd like to see potentially is a back test of that 618, because the 618 is important. You can see when we first came up to it, it got rejected really hard and then it came back down. And that 618 pre-halving is an important level historically. This is the first time we've actually broken the 618 before the halving. But if you take the halving out of the equation, whenever we're coming back up from the bear market lows, the interaction at the 618 is really important. If you start to lose the 618, then you probably are opening up a larger move lower, and that's where some of these larger pullbacks that we get in Bitcoin can manifest. So that's a really important level, that 48, call it 48,500 to 48,600. So that's a very important zone if we do trade down in there. I do think initially that's going to be a buying opportunity. If it happens quickly, right, and we still have a lot of time left in the month, remember, if bears are getting their way this week, they're probably going to have some follow through next week. So you have to you have time consideration in how this plays out. But if this comes down and this doesn't really manifest till like the end of the month, that's probably a stronger case for that low to hold as a higher low. And I would expect us to come back up and attack these highs should that play out that way. Otherwise, if we do get a lower dip, then the other area that I think is going to be a strong area for a bounce would be somewhere in the vicinity of 45,700 up to 47,140. I know that's a big zone, but that's how I mark these out. And you look for the price action to lock in down here. That would be the next zone lower that I'd look for. So I think all in all, it's bullish. I think the ETF flows have probably exceeded expectations. They've been really strong. It doesn't mean you can't have pullbacks. The narrative is going to be for bounces is going to be the ETF flows. But the other thing that I don't have up here is the open interest, Bob. Open interest, if you take open interest and don't include Bitcoin, so basically the entire alt market, it's actually higher than it was in 2021 at the all-time highs. I think that's amazing because that's a lot of leverage in the system. And back then we had the Fed pumping, right? We had a lot of leverage going on. So now the Fed isn't pumping. So there's a lot of money and I think a lot more leverage actually to get to that open interest level. So that's why I'm cautious, because we could see a larger pullback in this chart, because as the alt market deleverages, ultimately everything kind of gets hit. When that happens, it'll be healthy if it kind of resets, and then we can probably push up again and make new highs. But at these levels, I think the risk reward is to the downside until those open interest levels kind of reset and come back down.
Yeah, and you see it in the Bitcoin miners too. So they're pushing down again, and we have to watch some levels, from our, $2 or $3 lower than here to see if it's going to hold support and pop again, or if we're going to go ahead and Eiffel Tower the move from the ETF announcement. But guys, interesting stuff. Natural gas also has a seasonal for March too, so keep an eye on that one. And energy is good all through the spring, so we'll see how everything reacts to the market selling on. Remember, if SPY really dumps here, it'll kind of take everything with it, regardless of seasonals, at least short term. So just bear that in mind. It just will lose less. And look, we're so leveraged right now. No one can really predict, if somebody, hits the wrong valve here on the market and sends this thing spiraling. So just be cautious out there, at least till we get closer to April. And Phil, that's all I got. If you guys want to trade with us, check tradelikeagenius.com. And we have a lot of bundles, really good pricing always. And I think you'll like our service. We'll definitely help you make money.
See you guys on the next one. Take care.
Trade Genius.